Welcome to FX Street. Today we're going to be talking about Terra Classic, which fails to break a ceiling as bears use a technical handle to enter the price action. But before we dive deeper into the technicals, please make sure to subscribe to our YouTube channel and follow us on Twitter at FX Street Crypto to be updated on the hottest trends in the cryptocurrency space. I'll admit I might be an outlier this week as the only one who is talking about bears, because looking from the price action that we're seeing and all the crypto indices that are going staggeringly up and onwards, as Buzz Lightyear would say. But yeah, for me personally, Terra Luna Classic is finally making more sense. Bear with me in my reasoning. It will become logic in a few minutes if you watch this video. And that all for me starts with looking back at the price action at the beginning of the year, 55-day moving average, which has been the omen on the top side, very difficult to break through. Finally broke through it, came back for support, very good, and then we broke upwards again. My biggest issue that I have is with this R1 resistance level for January, and this price action here on Saturday past weekend. Price action went nowhere, very mild, 34 percentage points gains, which is nothing. But what worries me is the fact that price action was able to shot through the 200-day moving average and then went nowhere. There is nothing here that could trigger any rejection. I don't see it. I don't see any double top anywhere nearby, not at least for the past quarter. And that worries me a little bit because the risk at hand is that the bears could have used this small room here to enter. And as you could see here, for example, on the 27th, 28th of December, shot through, and then price action fell to the downside the day after. And it's a bit similar here. Okay, we went up, but then the R1 already came an issue. Bit difficult to get above there. Okay, we'll get it the next day, but then already some bulls said, no, this is not going to happen. I'm taking my money and I'm running for it. I'm making a run for it. And then we already saw some selling, 2.5%, over 2.5%, and then now 2 downbeat days yet again. And it makes sense to me because only now finally the financial year is coming under pressure on the speed. We had overnight in the Bank of Japan coming out with its monetary policy, and you could feel that already with the two events that have been going on in the past 12 hours that there is a big dislocation coming in. And that dislocation is between the traders themselves, the market participants, and the central bank. Because, for example, the Bank of Japan said we are going to remain with our yield curve control, while already yesterday quite a lot of banks were issuing statements to their investors, to their speculators, that the Bank of Japan might have cancelled their monetary policy and let loose of the yield curve control. It's all very technical. Look it up on FX Street. We have a lot of articles on there on the yield curve control from the Bank of Japan and a lot of good writers on that. But the most worrisome part about that is that the market completely got it wrong. So they didn't do anything, the Bank of Japan, while the market was buzzing that they would do something. And a similar event happened in the early morning with comments from ECB member Villeroy, which is normally quite a more dovish one. And he came out very hawkish. Markets were participating yesterday only a 25 hike for February, a 25 basis point hike for the ECB, and that was it. While this morning then Villeroy came out saying, look, it will be 50 in February, and it will be 50 throughout the whole of spring until the summer. And only then we will start to reassess where we are. So that's quite a big seismic shift or difference, if you can call it, because all in all, the ECB has not changed its language. But it's a different or quite an opposite view that the market is having with only 25 and then done, instead of doing at least another 3 times 50 from the ECB against what the market is expecting. So there is pain in there, and it's pain to come. So traders, before we can further look at a rally, I would love to see this first. Looking for support could well be that we need to dive all the way back to this 15 handle at the 55-day moving average before we then finally have enough support and buyers coming in to create volume and volatility in order to break above this 200-day moving average. And then for me, ideally, this 25 here comes into play with the R3 and the previous R1 of December coming into play. This will be a very relevant level, as you can see here. Unfortunately, there's not much to go on from the past months, but this looks very, very interesting as a whole. So expect quite a big cap, as it was already a resistance in December, but we never got there. And in January, it's a cap again, but it could be quite a big level, pure mathematically. And last but not least, this monthly pivot here from December with the top here. So once this is broken, looks quite guaranteed that we go to R3, but yeah, you need to keep an eye on. And meantime, keep in the back of your mind that the central bank speakers are awake, are back from their Christmas parties and their shopping and everything. The Christmas tree has been cleaned up and has been put back in the attic, and it's now back to business as usual. So watch out for any volatility and central bank speakers and markets readjusting to that central bank speaking message. And that's it for Terra Classic for today. Please remember to subscribe to our YouTube channel and follow us on Twitter at FXCrypto to be updated on the hottest trends in the cryptocurrency space.